Hello and welcome to another update video about Solana. Yeah, here on the Solana chart, we are looking at an overall uptrend. This uptrend started in 2022 in December or January 2023. At least this is when it really started to move. And you can see that overall in this pattern, we already completed waves 1, 2, 3 and 4. At least that's the current idea. And we could be in this fifth wave to the upside right now. And the fifth wave is, as per Elliott wave rules, also a 5-wave move. And you can see that we already completed waves 1 and 2. Probably also wave 3 and wave 4 could be nearly complete, with one more high to come in wave 5. In terms of possible targets for this current bull run, which started in 2022, I'm looking at the $360, $370 range. Of course, more bullish patterns are available, higher prices are possible, but let's first see if we can hold this current support region, and then if the market can form the next rally and move towards that $360, $370 range. It is important to recognize that the move to the upside from the August low looks somewhat different to all the movements that happened before between 2022 and now, right? Or let's say, and the March high 2024. Why is that? Well, it just has to do with how these patterns are made up. You can see that the initial rally looked quite impulsive. So that was wave 1. Very, very early days, very aggressive uptrend. And then we saw a typical correction pattern. So the uptrend, which was a local 5-wave move, got corrected by a so-called 3-wave pullback. You can see that here. And then we saw the next 5-wave move up, also impulsive. You can see that this was nearly like a 45-degree angle. The third wave is typically the strongest rally in an Elliott wave cycle. And the fourth wave followed then. That's again a corrective pattern. The wave 2 and the wave 4 often have the same duration, the same length. Not always, but it's a guideline. And then we often see that a fifth wave is the most difficult one to trade. Why is that? Because the third wave is quite easy to trade. It is typically a very aggressive uptrend. People who forgot to buy or who missed a buy order here in this first pullback after a first rally, well, they have to catch the train, right? They have to follow the price, they have to chase, so they will enter late and that drives the price up. However, when certain levels are reached, people will start to take profit, and that is typically what leads to these correction patterns here, like in a wave 4. So people who buy in the wave 4 will buy cryptocurrencies from anyone who already took profits, yeah? Because everybody who sells up here will typically be in profit. And then the fifth wave is typically a very exhausted end of this uptrend. So we see exhaustion. You see that the angle is less steep. Could just compare how it looked before. It's different, right? Okay, this was like this, yeah? Steep, less steep, even less steep in wave 5. So that means we're getting to a stage of the market where this rally is probably close to completion. Looking at the pattern itself, because a wave 5 should also be a 5-wave move, we likely need one more high. Of course, different interpretations are possible here, and that just has to do with the situation that the move to the upside from the August low is a so-called diagonal pattern. Whereas in these previous structures, we call the rally impulsive. It is a rally that is based on certain Elliott wave rules and guidelines. It's very aggressive, very easy to trade, respects our support levels really well. In a diagonal, that is much more difficult. But overall, the current support is located between $163 and $179. And as long as this is holding, we should get one more high. Below that range, alternative interpretations come into play. Okay, now let's take a look at the shorter time frame. Well, here on the shorter time frame, we were watching for reaction from this lower support region, between $163 and $179. I just mentioned this support area on the larger time frame, but I highlighted to you that, yeah, one more low is still possible, and we could be forming here something like a triangle pattern, which, however, would be invalidated if we get a sustained break above the Saturday high that is located at $202.20. So the previous analysis is still valid because the market could not break above that level. The move to the upside looks corrective. There are some overlaps in here, even though not significant, but still overlapping structures. It looks very corrective. The pullback here was also very deep into the Monday low, and I'm not convinced yet really that a low is in, but I can see the potential for a low to be in, yes, but I need to see a break above that $202.20 level. And the thing is, this could easily be a triangle, something I'm observing on the Ethereum chart as well, something I'm observing on the Bitcoin chart as well. If it's a triangle, it could just lead to one more low. These triangles often happen over holiday periods, so yeah, it makes sense. At least I'm watching it. Doesn't mean it has to happen. I'm just watching that potential for a triangle. The yellow trend lines indicate a local range, not very well defined trend lines, but they indicate a local range, and we could move in this range for a little while, okay? So I'm tracking this here as a yellow triangle in a wave 4 with possibly one more low. But any break above the Saturday high would indicate that we could be moving more directly to $215.50 next year. If we see a break below the Monday low, it could mean that we are moving down in wave 5 to target $171 or 163. So no confirmed low at this stage, unfortunately. That's the update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.